Hey traders and investors, it's Serge Berger here. We are really coming right into the thick of earnings season here, pretty much starting today, Monday, April the 14th for the first quarter 2014. And it's going to be presenting a whole bunch of stocks to trade that I'll be doing for the portfolios that I manage, and certainly for the subscribers to the Trade Alert service in real time. So I wanted to walk you through, a couple of strategies, particularly here in Yahoo, that I think are setting up well. Of course, we've had a lot of stocks sell off here the past. Really, the past few weeks, and some of them have already started topping out in January, like Yahoo did. So I really it gets us to a lot of great opportunities for stocks, particularly this earnings season when it comes to some of these technology stocks. Because depending on how they behave after their earnings announcements, we could see some real high probability trades. So if you look at Yahoo quickly, you'll see that obviously monster move here. Pretty much starting in late 2012, like the broader equity market, they're topping out in January, like I said. But the move here over the past few weeks has been, past couple of months rather, has been rather concerning, and we've now finally gotten back to the 200-day moving average. And this is a recurring theme you can see all over the market. From the Russell 2000 to maybe the Nasdaq 100 soon as well, and a lot of individual stocks coming down to the 200-day moving average for the first time in really like a year and a half, sometimes even in some cases more than 2 years. Yahoo's here, so this also coincides in the case of Yahoo to an uptrend line that dates back to October 2012 as well. And pretty much, what I'm looking to do here is, depending on how stock reacts, I think it'll have momentum in that said direction. So, particularly, I would be very interested in shorting Yahoo if it can drop sort of, let's call it below 32.50, $32 on daily closing basis. I really do think if we just kind of look at this monster move it had and use a basic Fibonacci retracement level, retracement area, you can see that the stock currently has really only retraced about 38.2%. More, I'd say, comforting from a long-term, medium-term point of view, really would be a 50% retracement, which get the stock to somewhere between 28 and 29 bucks. Okay, so that's certainly another 10% lower, at least below Friday's low. So that's the kind of thing I'm looking for. On the long side, I think if Yahoo can somehow get back. Probably not until it gets back above $35.50, $36 is it worth looking at alongside for my time frames of that lasts at least a few days to a few weeks. So I think Yahoo really would have to have a big move to the long side for me to get to the upside for me to get interested on the long side here. But again, the main takeaway here is that a lot of stocks are near the 200-day moving average that haven't been in a long time coming into earnings, and earnings could really be just sort of a make or break thing here for a lot of these stocks. So wait for the stocks to come out and then see what the first move is. So maybe give it like a half a day or a day for the stock to really kind of settle, and then see if there's something you can do. Because a lot of these stocks, like I said, are at the moving average, but really they're itching to break below. So if there is going to be a move into the downward direction, I do think there should be some continuation selling in that direction that we can participate on the back of earnings. I hope this makes sense. As always, if you got any questions, you can hit me up on Twitter, where my Twitter handle is SteadyTrader. Take care.